Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Gladstone Land stock is a buy. Gladstone Land, stock ticker symbol LAND, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot of awesomeness to cover, so let's go ahead and jump right in. Cue the logo. So what is a REIT? A REIT is a real estate investment trust. A REIT is a company that owns, operates, and/or funds real estate that generates income. They take investor capital raised from stock offerings and use that capital to buy, sell, lease, fund, and/or operate real estate. This gives investors an opportunity to own fractions of real estate without the hassle of buying, operating, or funding the ventures themselves. Additionally, REITs function just like stocks and are therefore highly liquid, a characteristic that traditional real estate typically does not have. For entrusting your investment to a REIT, you as the investor receive dividends from the generated income in addition to any capital appreciation your REIT's shares experience. In fact, to qualify as a REIT, the company must meet the following requirements. The company must invest at least 75% of total assets in real estate, cash, or US Treasuries, derive at least 75% of gross income from rents, interest on mortgages that finance real property, or real estate sales, pay a minimum of 90% of taxable income in the form of shareholder dividends each year, be an entity that's taxable as a corporation, be managed by a board of directors or trustees, have at least 100 shareholders after its first year of existence, have no more than 50% of its shares held by 5 or fewer individuals. Just to reinforce this, REITs must distribute a minimum of 90% of taxable income in the form of shareholder dividends each year. So think of REITs primarily as income generating assets and secondarily as appreciating assets. Well, what is a farmland REIT? Simply, farmland REIT is a REIT that generates income from farmland. Typically the farmland REIT buys farmland and leases it to farmers. In general, farmland investing has become very popular as it offers uncorrelated consistent returns with minimal volatility. This is great because it is a relatively well-kept secret. According to the United States Census Bureau, only 1.5 million Americans own farmland. That is less than 0.5% of the United States population, and the returns are great. As an asset class, farmland has returned a healthy 12.1% over the last 20 years. A study from AcreTrader found that a $10,000 investment in farmland made in 1990 would now be worth over $199,700 over the same time period. The S&P 500, a collection of stocks of the 500 largest companies in the US, returned 9.2%. With these returns, the same $10,000 investment would be worth only about $117,500 today. We think those figures of 12.1% for farmland and 9.2% for the S&P 500 refer to annualized returns, but it is pretty striking. The returns are so appealing that Bill Gates, the legendary founder of Microsoft, is the largest farmland owner in the United States. And he continues to buy more. It is estimated that Gates owns nearly 270,000 acres of farmland. So how can we get in on the action? Now let's move on to some background info on Gladstone Land. Gladstone Land is a real estate investment trust or REIT. Gladstone Land doesn't grow crops. They buy high quality farmland across the US, lease it to experienced farmers, and collect the rent like clockwork. It's a win-win. Farmers get prime land, and investors get a taste of the agricultural pie. The company was founded in 1997 and they have been cultivating a portfolio of over 140,000 acres across 15 states, focusing on regions prime for high-value crops like berries, vegetables, and nuts. While their land footprint is expansive, Gladstone keeps things streamlined with a team of around 20 dedicated professionals. They focus on strategic acquisitions, meticulous tenant selection, and expert property management. ensuring their farmland hums with productivity. Now let's look at the price action. Starting with the 1-year chart, we see that Gladstone Land had a CAGR of about -23%. Zooming out to the 5-year chart, we see that Gladstone Land had a CAGR of 4%. Gladstone Land share price had been a steady climber but has been in a severe downtrend recently. If we perform a backtest comparison of investing $10,000 in Gladstone Land versus the S&P 500, we find some interesting results for Gladstone Land. In that comparison with the S&P 500, $10,000 invested in Gladstone Land would have grown to $13,087 or a 5% CAGR versus $18,848 or an 11% CAGR if invested in the S&P 500. This demonstrates tremendous underperformance for Gladstone Land. A Gladstone Land investment would have been more volatile with a 34% standard deviation versus 18% for the S&P 500. Gladstone Land outperformed the S&P 500 in terms of the best year performance, for which Gladstone Land grew 136% versus S&P 500 31%, but Gladstone Land had a worst year performance where Gladstone Land fell only -44% versus the S&P 500 18% fall. In terms of max drawdown, Gladstone Land fell 61%, more than the max drawdown of 24% for the S&P 500. And surprisingly, Gladstone Land did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Let's take a look at the fundamentals. Gross margin is 87%. This is slightly above similar farmland REIT investments. Revenue has compounded at around 21% over the past 5 years and has reached over $91 million most recently. A big jump in revenue is seen from 2019 to 2020 to 2021 to 2022. It seems this revenue growth was likely due to commodity inflation. Given that we are analyzing a REIT, we will use adjusted funds from operations instead of cash flow. To calculate adjusted funds from operations, we first need to calculate funds from operations. Funds from operations is equal to net income plus amortization plus depreciation, capital gains from property sales. To adjust for rent increases and maintenance expenses, we add rent increases and subtract capex and routine maintenance costs from funds from operations to calculate adjusted funds from operations. Here we see that the adjusted funds from operations per share grew at a 9% CAGR over the last 5 years. Gladstone Land has continued to acquire more farmland, raise rents to generate more income that is then leveraged to buy more farmland. They also sold off less desirable land during the height of inflation to capitalize on price appreciation. This is very good and promising for the company's futures. Weighted average shares outstanding have increased dramatically over the last 5 years, going from 15.5 million shares in 2018 to 35.5 million shares most recently. Gladstone Land has been diluting shareholders a lot. This is the problem with a REIT. The business model is such that they rely heavily on equity financing, which dilutes shareholders, and debt per share metrics will be particularly important in evaluating REIT investments such as Gladstone Land. Let us know in the comments below if you have ever come across a REIT that does not dilute shareholders. I would love to hear more about it. Now let's view return on assets. Return on invested capital is not calculated for REIT investments, but return on assets provides a somewhat similar metric. In this case, return on assets shows a percentage of income from land, the primary asset the company owns. Return on assets has grown from 1.3% in 2018 to 1.5% in 2023. While the current value is higher, the trend has declined from high values in 2019 and 2020. Again, receding inflation means Gladstone Land will generate less income from their property than during peak inflation, but this already appears to be leveling out. Now, let's look at Gladstone Land's debt. The net debt to EBITDA has fallen over the past 5 years, going from 17.5 in 2018 to 8.6 most recently. All REIT investments use debt, so it is good to see Gladstone Land with ever diminishing levels of debt, especially as interest rate rose. The really good news is that the debt that Gladstone Land does have was financed at relatively cheap rates. Looking at this table from the Q3 2023 earnings report for Gladstone Land, we see that the company has no variable rate debt and that the weighted average interest rate for notes and bonds are 3.73% and 3.64%, respectively. This is a great position for the company to be in. Last, let's explore dividends. Current dividend yield is 3.97% with a dividend payout percentage of -189%. Because Gladstone Land is a REIT, they routinely paying out more dividends than current earnings can support. This deficit is made up by taking on new debt and issuing more shares. Dividends per share for this company have grown about 1% per year over the past 3 years and 0.77% per year over the past 5 years. The fundamentals of Gladstone Land are pretty solid. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Gladstone Land. REIT investments are totally different from food and restaurant stocks, so I will be using adjusted funds from operations per share instead of free cash flow per share, as well as return on assets instead of return on invested capital. Gladstone Land is a REIT with a gross margin of 87%. The 5-year revenue per share CAGR is 2% and the 5-year adjusted funds from operations per share CAGR is 9%. This shows steady growth coupled with a good gross margin. The return on assets is 2% and looks to be leveling out. There is no cash conversion cycle. Concerning debt, a net debt to EBITDA of 8.6 means that it would take Gladstone Land a little over 9.5 years of earnings to pay back their debt. So from a fundamental standpoint, Gladstone Land is a pretty decent REIT. Given that Gladstone Land is a REIT, both its valuation relative to the S&P 500 and its PEG ratio are unable to be calculated. Instead, we can see here that the net asset value per share calculated as of Q3 2023 was $20.33 versus $16.56 for Q3 2022, a 23% increase in just a year. Compared with a recent close price of $14.55, one might conclude that Gladstone Land is 28% undervalued. One thing to remember is that the net asset value is determined by a valuation team at Gladstone Land that use a combination purchase price, comparable values, and third-party appraisers. In other words, I would take that value with a grain of salt. Gladstone Land has had growth over the past 5 years, but it is tremendously sensitive to both inflation and interest rates. Inflation affects the rent that the company can charge, and interest rates affect the amount of debt the company can take on to acquire more farmland and run the business. A farmland REIT has its place in a food portfolio, but having a good understanding of the pros and cons is important. While I am open to adding this company, more analysis is needed to optimize the time to buy. Many thanks for watching. What do you think about Gladstone Land and REIT investments? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.